All right, this is Steve at Trade Ideas, and I'm going to show you the easiest way to manage risk, only using two indicators. That's right. What are they? I'll tell you. The 10 SMA and the 130 SMA, both on a 15-minute chart. If you want to know more, let me tell you why we use a 130. A good friend of mine, Brian Shannon, once taught me that there are 130 15-minute candles in a 5-day trading period. So rather than clutter up my daily chart over here with more lines and more moving averages, I'm transposing it over to my 15-minute. Okay, it's this dark blue line. This is the actual 5-day rolling moving average coming through our 15-minute time frame here, and you would be amazed if you use that. Real quickly, all it takes is just an indicator and a simple moving average, and then you use a 130 period for your moving average. So you've got a 130 SMA, we would call it. Make sure you're using a 15-minute chart, and these things will start to line up. I'm going to start with Rumble, and you can see how a lot of times the 130 or 5-day moving average, if you will, can become a pivot line or a pivot area, a moving pivot area. Resistance can become support. Now, I bring up rum. I want to start with rum. I'm going to give you 5 or 6 stock examples here on how you can just use these two moving averages to determine, should I stay in this trade or should I not be in this trade? Pretty darn simple request. Most traders are looking for that idea. So here we go. This first example is what we call a pinch. And when I say pinch, I mean I'm anticipating that 5-day moving average and the 10-period SMA, which I affectionately call the momentum indicator. As you can see in Rumble back here, as long as it held that 10 SMA, it was in motion on momentum. So momentum traders would use that candle right there that closed below that rising line as their exit. Momentum died, get out. But if we back out a little bit in time, where are we likely to find more buyers to kick the price back into play? It's usually this 5-day simple moving average. So I'm going to start with rum, and we're entering what I would call a pinch play. So if you're long Rumble right here, you want to see it over here on the daily chart. I'm going to zoom in just a little bit so we get a better perspective. We've been rejected a couple times up here around $9. We've had earnings. We've pulled back into the 10-day moving average, but if we dive in a little deeper here, the 5-day is showing us support at the end of trading last week. So first things first, you want to make sure if you're in this on Monday that it stays above this 5-day moving average. Otherwise, you might want to manage your risk, get out and reassess. But this pinch play is approaching, and basically it's going to resolve is the word I'm looking for. If it resolves to the downside, you're out. If it resolves to the upside, you stay in. It's that simple. Let's move on to another example here real quick. Sound. I'm going to show a couple of AI stocks. The reason I bring up Sound is I want to highlight how many times it has just knocked on the door down here. It's trying to bounce. As you see on the daily chart, it's trying to find footing, but it really can't. But as the declining 5-day moving average comes in, if you were buying here and hoping to get long, you have to anticipate. Every time I'm underneath and I'm buying something small size, I'm anticipating I need a break above this moving average. If it fails, which it did here, you've got to get out. Minimize your risk, because as you can see, the subsequent candles just are continuing to be hammered by the downside moving average pushing down on it. Let's take another example here and use another AI stock. Coincidentally enough, AI. Again, declining 5-day moving average. Both of these stocks are kind of in the same sector. Let's move in a little bit and we can start to see some touch points. If you're a hoper, you're hoping for this stock to go higher. Well, every time it gets rejected at this line, the 150 or the 130, excuse me, you've got to realize it's not ready to go. And it's just a matter of time probably before the price action, like a bouncing ball, just gets pinched. We're approaching a pinch play probably. Let's move on to a couple more. MindMed. This is a stock that I've been in. I've been trading and in and out. You can call it trade around. If we look at the daily, it's broken its 10 period. So I'm anticipating that it could literally come down and pull back to this rising 20-day. That's entirely possible. Let's move into the intraday, and it does kind of confirm that. If we look at it, we can see right here, this is an example, for the most part, support, support, and then it broke. Right there is when, if you didn't take profits or realize I need to thin out of this or get out altogether, it's now under pressure. I mean, MindMed is now handily below. You can see a couple of feeble attempts to try and get up there. So anything that's below a 5-day moving average and this thing's starting to roll over, you're kidding yourself. You're a hoper if you want this thing to turn around and go. It's easier to just rip the Band-Aid off and wait for a better entry and wait for confirmation on the chart. Let's do two more. We're going to go into the car market. Carvana has been just ripping the shorts higher. Perfect pullback on the last week's trading right to the 10-day moving average. I've got another video on how to buy on the pullbacks to the 10-day moving average. But intraday, look at what happened here. At the close of the day, it gave away the 5-day moving average and broke down. So it's got that same look of heaviness that MindMed just had, a rolling 5-day moving average, and you're likely to see a lot of escalation, or not escalation, trading at that level. Supply. Lastly, Tesla. And this one will be fun because going into Monday, everybody likes to watch Tesla, and it's kind of painting itself into the same situation. It's in a bad downtrend, all right? This downtrend has, not been unnoticed by many. The 50-day moving average is very similar to the 5-day, in my opinion. It's below it, and it's kind of guilty until proven innocent, to borrow another phrase from Brian Shannon. But real quick, Monday, if you're long Tesla coming into the weekend and you want to decide, I'm not really sure if I should keep this or maybe I should back away and wait for a better entry or a better pitch, to use a baseball analogy, all you have to do is say, is this going to hold again? It's held twice, but you can see it gave a lot of it back, and now it came back, and we are actually in a pinch play. So we started with a pinch play, and we're going to end with a pinch play. What's going to happen on Monday to Tesla? Trades below here, below 175. I wouldn't want to be long Tesla. If you're long, you can stay in positive mind frame if it does break back above that pinch. So just think of it as price painting itself into a corner. It's going to resolve one way or the other because time is not going to stop, and time is going to force these two lines to do something. So I hope that helps you all. Please email us if you have any questions. Thanks for the replies, comment, like, share, and all that. So have a good day.